Today we're diving into the world of gold investments. For centuries, gold has been a symbol of wealth and security, and even in today's financial landscape, it remains a valuable asset. We'll explore various ways to invest in gold, weighing the pros and cons to help you make informed decisions. So let's delve into the shimmering world of gold and discover the investment strategy that's right for you. Let's begin with the most traditional form of gold investment, physical gold bullion. This form of investment has been around for centuries and remains a popular choice for those looking to diversify their portfolios. When you think of gold, you likely picture gleaming gold bars or shimmering gold coins. These iconic images have long been associated with wealth and stability. Investing in gold bullion means purchasing physical gold in the form of bars or coins. This tangible asset can be held in your hand, offering a unique sense of ownership. These bars and coins are typically measured in troy ounces and come with varying levels of purity, with the most common being 24-karat gold. The higher the carat, the purer the gold. The tangibility of gold is a major draw for many investors, providing a sense of security and control over your investment. Holding physical gold can be reassuring, especially in uncertain times. Gold has historically held its value even during times of economic uncertainty, often seen as a safe haven asset. Its performance is often compared to other investments like stocks and bonds. However, consider the practicalities: finding a reputable dealer, ensuring authenticity, and arranging secure storage. These factors are crucial to protect your investment and ensure its value over time. Now let's move on to a more modern and accessible way to invest in gold. Gold exchange-traded funds, or gold ETFs, have revolutionized the way investors can gain exposure to gold. Gold ETFs are investment funds traded on stock exchanges, tracking the price of gold. They offer a convenient and cost-effective way to invest in gold without the need to physically own it. When you invest in a gold ETF, you are purchasing units of the fund, and the value of your investment fluctuates with the price of gold. This allows you to benefit from the price movements of gold without the hassle of storage and security. One of the biggest advantages of gold ETFs is their ease of trading through your regular brokerage account. You can buy and sell them just like any other stock, making them highly liquid and accessible. This eliminates the complexities of finding reputable dealers or arranging secure storage. You don't have to worry about the physical handling of gold, which can be cumbersome and risky. Moreover, gold ETFs tend to have lower expense ratios compared to actively managed mutual funds. This is because they are passively managed, tracking the price of gold rather than trying to outperform it. This means you keep more of your returns, as the fees associated with managing the ETF are generally lower. Over time, these lower fees can significantly enhance your overall investment returns. By adding a gold ETF to your portfolio, you are diversifying your holdings beyond traditional stocks and bonds, potentially reducing your overall portfolio risk. Diversification is a key strategy in managing investment risk and can lead to more stable returns over the long term. Finally, let's explore the fascinating realm of gold mining stocks, a unique investment opportunity. This investment avenue offers the potential for significant returns but comes with a higher risk profile, making it suitable for those with a higher risk tolerance. Investing in gold mining stocks means buying shares of companies engaged in the exploration, development, and extraction of gold. These companies are often involved in various stages of the mining process. When gold prices rise, these companies often see their profits and share prices increase as well, leading to potentially lucrative returns for investors. However, gold mining is a complex and capital-intensive industry, requiring careful research and due diligence. The costs associated with mining operations can be substantial. It's essential to analyze a company's financials, understand their management team, and assess their track record before making any investment decisions. This helps in identifying companies with strong fundamentals. While gold mining stocks can offer higher returns, they are also more volatile than other gold investment options. Investors should be prepared for dramatic fluctuations in stock prices and market conditions. Thanks for watching. If you found this video helpful, please give it a thumbs up and subscribe to our channel for more investment tips. We've explored 3 distinct ways to invest in gold: owning physical bullion, investing in gold ETFs, and exploring gold mining stocks. Each approach has its own advantages and disadvantages, and the right choice depends on your financial goals, risk tolerance, and investment timeline. Remember, knowledge is power. Stay informed to make sound investment decisions and build a secure financial future.